Okay, I know. Yeah. Oh, okay. I don't know.
Hi, Ms. Major.
Hi, good day.
Hello, hello, hello.
Okay.
Did they do something with this room? Yeah. So did you guys enjoy the time away? Anybody online yet?
Yes, sir, I'm here. Yes, sir, I'm here.
Oh, excellent. Okay. We're just waiting for the others to come in and then we'll begin. Can you guys see the board? Online students?
Yes, sir, it's a good viewing today.
Okay, excellent, excellent. Let's see if I can get these names right. Camera. Yes. Why? No? Oh,
Different.
already. Oh, yes. Excellent.
Okay. Good day.
I'm right in. Who just walked in?
Unique.
Vanique. Okay, Vanique, yes, okay. Vanique. Okay, online is Terranique Major, yes?
Yes, ma'am.
Okay, Terranique Major. And who's my other online student again? Ivanique? Ivania?
Ivania, yes, sir.
Ivania, yes.
Yes, sir.
Ivania. Excellent. We're getting there. 1, 2, 3, 4, 6, 7, 8.
Mr. Wilkinson, Victoria. Hi, Victoria is online.
Victoria as well.
Yes.
Victoria.
Double.
Hold that thought, Vanique. Okay, Victoria Darvel. I think you guys, so that's how many persons? 3 so far. I think if you guys want to do virtual, you may have to petition, call Ms. Dan, make petition. Like the people in Iran. That might work. Because after a while, yeah, make a petition. And if you make a petition, then it's just a matter of switching over, just like sending the link and doing what we do, same thing.
Good evening.
Good evening, who just walked in?
Crystal.
Crystal, okay, Crystal. Crystal, yes.
Good evening.
Good evening. Who just walked in?
Johnson.
Johnson. Crystal Moss and Johnson. Yeah, so I was just saying, if you're still interested in virtual, petition Ms. Dean. Send an email, make a phone call, both, all of the above. And say what students say. Absolutely, this is no different from any other campus. Absolutely. So, Ms. Johnson, Tanisha, yeah? Taisha. Okay, looks like we have a quorum. 1, 2, 3, 4, 5, 6. I just walked in. Fixed up. Okay. Okay. So we had a holiday last week. We missed class. But that doesn't mean we still don't make up for the class. Holidays are holidays. And so tonight we are going to focus on chapters 1 and 2. What session is this in? This is our second or third session. Anybody knows? Third, yeah. And the holiday interrupted that and all that stuff. So we are going to seek to do 1 and 2 tonight, so we can begin to play catch up a little bit. I will also assign homework tonight for chapters 1 and 2, which I've already picked out, so that you guys can get the desired and required practice. That's the whole idea of the assignment. Practice, practice, practice. That's the key. And I'm hoping that by the time you sat down and gone through your problems, that you would make notes, etc., of any problems you ran into, any concerns you have, so that before we get into next week's session, we can have a little powwow about where you got stuck. For those who might get stuck, some people just kind of go right through, they get it. They follow the text, they follow the program, they get it. Other people get stuck in the middle of somewhere. Okay? That doesn't mean if you get stuck somewhere, you cannot send me an email and say, I'm stuck. I don't know how to do this journal entry for some reason. I don't understand the transaction. If you need to do that, please do that. That's the whole idea. Accounting is the reading side of it. It's just the meeting of at a date. The actual practice of questions like these I'm going to assign, and any others that you do on your own, is always going to be to your greatest benefit. Just like any other thing, the more you practice, the better you become. Accounting is no different. There's nothing magical about it at all. So that's our goal for tonight. Now we have, before I get to that, week number 4, which is next week. Our goal is to do chapter 3. And I'm putting this here so those of you who can't sleep at night, you can get up And instead of doing something boring, you can read accounting. How's that? Read ahead. And week number 5, you do chapter 4. Week number 6, we'll do chapter 5. That's our goal. So if you want to read ahead, I encourage you to do that. Week number 7, which is when you're supposed to have your midterm, what happens again? Anyone knows? Another, is that confirmed? October 17th is Columbus Day? Is that week number 7? What is our week number 7? So we're in 3, 4, 5, 6. What is week number 7? What date is that?
24. October 24.
Oh, so then we. Hi. Good evening. Who just walked in? Shani? Okay, Shani. Week number 7 is October 24th. Okay, great. So please make a note of that. That means that you have the holiday to do what? Exactly. Study, practice, study, practice, study, practice. But everybody's having fun and all that stuff. And you have some extra time to review to be ready for your midterm exam. So you guys should be in good shape. You have no excuse whatsoever. Okay. For those persons who just walked in, one more time. Tonight, we'll cover chapters 1 and 2. I'll assign homework assignment. Next week, we'll cover chapter 3. The following week, chapter 4. The following week, 6, chapter 5. The following week is a holiday. And then on October the 24th, you'll have your midterm exam. We were also discussing virtual still, for those of you who are still interested in virtual. Remember, we have 14 weeks to go, so if you are, please petition staying. And make your voice be heard like those people in Iran. All right. So let's get cracking. Remember, you can raise any question anytime in this class. There's no set time. If I say.
I think we found wrong.
You did?
I look at it in here like this one starts September 5th, right?
What made you go back and double check?
I'm going away on the 20, I'm being away on the 24th. I need to make sure it's right.
Well, at least she has an incentive. Okay, let's see what your colleague has to say. Your fellow accountant. Okay, let's do it. What did you do? We started when?
September 5th,
The 5th. Okay, the week after that is what?
the 12th. The week of the 12th.
And tonight is the week of the?
No, the week of the 19th.
That's the holiday. And tonight?
26th.
26th, okay.
The week of the 3rd.
October 3rd?
Mhm.
Okay, October 3rd,
The week of the 10th. October 10th.
October 10th.
October 17th.
It's the holiday.
The 10th.
But the 10th is actually the holiday. Okay, the holiday. So we're here tonight and we have 1, 2, 3 sessions. So this is 1, 2, because this doesn't count. Right? 1, 2, what's the date after this? 24th. Okay. So those are 3 sessions before the midterm, which means that our midterm is actually going to be when?
The 31st.
The 31st. Now, let's see if we can get an agreement in this parliament. Is it the 31st?
31st.
If there are any objections, say I object and here's why. Okay. Sorry? Say it again? Halloween doesn't count. You could bring your mask and all that, and then after class, go out and do your thing. But that's,
No, I mean like it's the thing, that's driving the night.
oh, there you go, doggone it. Petition, where's that? Petition. See, you guys are of the future. Start making, no, it's early. Petition, do not be afraid. I sent my boss a spooky email today. Now tomorrow he's gonna run completely out. I know, I sent him an email about changing certain job titles. I sent him an email about improving the group insurance plan because the current one is not good. And I sent him an email about salary increase. So tomorrow he's gonna be like out hitting the roof because bosses don't like to hear none of that. Okay, but I did say before, I said, for your kind consideration. And then when I got the salary increase, if you do consider it, I would be most grateful. If you don't, I would understand. Because they don't like you to tell them, like, I demand it. You have to, this with Cameron, he's the youngster in the room. You have to look like you are. What? Starts with B. Yeah, begging. Even though you shouldn't be looking that way at all, Cameron. But if you look like you do, confident asking about it. Like, I think I need, then they're gonna say this young punk doesn't even understand what he needs. All right, so yeah. Petition. All right, somebody did mention something about doing some practice sessions and all that. Don't worry, we're gonna get there. But I'm going to, usually what I do is I do the assignments and give you a chance to go at it first. I don't want to just walk you through it and then you say, oh yeah, no, that doesn't work as well when you have to go home on your own and start working through it. So going back to check stuff, checking like that. That's what really works for most students. And if it doesn't work, hi. Hi.
So are we going the 31st of October or the 24th for the midterm exam?
The 31st.
On Halloween?
On what?
Okay. Isn't that Halloween? People throwing eggs at you?
Well, if you guys are virtual, the other guys, if they petition well enough, they might be virtual too.
No, but we have to
Otherwise,
come in for the exam.
Yeah,
We have to
well,
come
that's
in for
true.
the exam.
That's true. Well,
Yeah, different.
yeah, you'd have to, yeah, for the exam. But that doesn't change this other thing for the next other weeks, etc. But you do have to come for the exam, yes. And since it's Halloween, you may need a police escort. I don't know if the Biffs will. Life stinks, doesn't it? Doggone it. Okay. Yeah, it stinks. Okay. Now it's funny, says, isn't that Halloween? Why the hell should I be driving and throwing eggs? Where am I? It's interesting how things happen. All these things fall in between diet, Halloween. All designed to try to discourage us. But we will not be discouraged because we are young petitioners for virtual. When I was a youngster like you guys, they used to always look at me funny because I always question things, and folks didn't like when young people question stuff. They just want you to shut up and do it, which is okay, but you should be allowed to do what? Question from time to time. But don't think that it's unique to you guys. It's an old thing from back in the day. They don't like that too much. But sometimes you have to raise a question. It's just how you raise it. You raise it respectfully. You don't say, damn it, I'm gonna, not like that. Like that, don't do it like that. The people get upset. Even though you don't really mean anything personally. They take it personally. Okay. Where did we stop in chapter 1? Anybody remembers? It's such a long time ago. Did we do the accounting equation? Like, did we say what assets and liabilities and equity were? Yes, we did. Oh, yeah, but that cash flow thing we went through, and you guys did a pretty good job with that. Anybody went back to look at that since then? Not really. But I believe I may have given you a cash flow homework question. And you could always pick one and do a little practice on your own. This cash flow is a little more challenging, as you saw, than say the balance sheet or the income statement, etc. Did we do the balance sheet and income statement yet? No, not yet. So what is owner's equity then? Anyone? Let's get warmed up. What is owner's equity? Yeah, the investment that you make in the business, or the investment anybody makes in any business, period. Whether it's a small business or a multi-billion-dollar business. Okay, good stuff. And what is a withdrawal? Yeah, when you take money out of your business. So if you start a business and you put in $30,000 and every week you keep taking out like $3,000, what do you think is going to happen eventually? So you wouldn't have any money to operate the business. You'll either have to put more money in, or eventually you will have to shut down. Because soon you wouldn't be able to pay your bills. Okay? Just like when you get your salary, if you spend it all on beautiful things and don't pay all the utility companies, etc., soon they will turn off your stock. Same principle. All right. Did we talk about the accounting equation?
Yeah.
What did we say it was? You have to learn that one by heart. What is the accounting equation? Absolutely. That's a religion in accounting. If you miss that, dog eat your lunch. Your life will be miserable. I guarantee it. Okay. So you want to learn that by heart. And remember, we said that the equation must always balance. That's what we mean by balancing in accounting. That's one of the things. Okay. Using that equation. So if your liabilities, what you owe, plus your equity, what you invest, does not equal your total assets, you did something wrong. You have to go back and find out what you did wrong. And you get to learn all that stuff soon and very soon. So what are the key financial statements we've looked at so far? Anybody remembers? The income statement, the equity statement, the cash flow statement, and the balance sheet. Become familiar with them. You'll see them a lot. They are the foundational communication equipment for accounting. That's where we take all the transactions. We journalize them. You'll see what that is soon. We post them somewhere. You'll see that soon. And then we communicate it to those who need it. The managers, the boards, the government, the shareholders, employees, anyone, investors who want to see the performance of the company. It's done through the financial statements, the four. Now, you may not always see owner's equity statements out there in public, but you will certainly always see the income statement, the balance sheet, and the cash flow statement. Remember, for those of you who read ahead, you know already anyway. The cash flow statement only shows what kind of transactions. Cash. Cash. That's it. Nothing else. For example, the income statement shows two kinds of transactions for revenue. One, cash. The income statement shows two kinds of income. One is cash. The other one is, anybody knows? Sales on what? Sales for cash,
Expenses.
sales for? Sorry? Not expenses yet. You can sell something for cash or you can sell it on credit. Anybody ever did anything on credit? What does credit mean? Yeah. Yeah. So if somebody comes in your store and say, I don't have any money, I'd like to buy this on credit for $300. What you are doing then, if you say yes, what you're doing is you're giving them the product now, right? And when will they pay you? Later. Is that a good deal? Depends on your financial condition and who this person is. See? And accounting has a methodology for recording just about any type of transactions you can think about. As a matter of fact, any transaction that occurs in any business should be recorded. Are they always? No. Why not? People either don't know, they miss it, they're careless, they're eating, they left it out on purpose, they're fraudulent, all kinds of stuff goes on. You guys are here to see how it should be done. Now, what people actually do is a whole different ball game. But our focus is to see what should be done. So in this transaction, where there's credit, for example, if we sell for cash, what do? We say, and don't worry if it doesn't make sense yet, we debit cash for 300 because we're receiving money, and we credit sales for 300 because we made a sale. This is called a journal entry, and you'll see that later tonight. And every transaction that occurs in business must be recorded in a journal somewhere, whether it's manual or electric. Electronic meaning accounting software of some kind. Excel of some kind. But it has to be recorded. On the other hand, if this is a credit sale, instead of debiting cash, we'll debit an account that you'll see lots of times called accounts receivable. For how much? 300. And even though you didn't get the money, you still made a what? Sale. See how accounting works? So it still records the sale, even though you didn't get cash. And over time, you will learn how to record all kinds of different transactions. Because how well you record them and how accurately you record them will determine how accurate the financial statements are at the end of the month or year or quarter or whatever the period is. Let me see if anybody read ahead. The accounting period is usually what, anyone? The normal accounting period. 1 year. Okay. So yeah, somebody read that somewhere. Or maybe I said that in the first class. Doesn't matter. I believe it, right? It's 1 year. That's the normal accounting period. So usually financial statements are done annually. Annually. But that doesn't mean it cannot be done monthly. It can. Quarterly. Every 6 months. Biannually. It can. Daily even. Nice little things to know. All right. But before we get into all that other mumbo jumbo, it's so nice that you guys are already familiar with things like the accounting equation, the major financial statements, the accounting year is 1 year. These are all very important things in accounting. Okay? And do not underestimate any of these fundamental things you're learning in accounting 1, because what you're learning in accounting 1 is going to be a foundation for any accounting you do in the future or any understanding of the accounting process, even if you don't go any further. How about that? It's the ABC of the whole thing. So by the time you get to grade 6, you're only a great reader because you learned the alphabet in grade 1. See, that's the same principle. So don't take it lightly at all. This is the crucial stage, the alphabet stage. It's my foot. Okay. Page 13 then. Let's look at a typical income statement that you should have already read. Because most of you should have read at least somewhere up to chapter 3, or certainly by the end of chapter 2, hopefully, in some form or another. If you did and you didn't understand everything, the devil with it. You're not expected to understand everything. You'll finish the semester and not understand certain things. That's okay. There are some CPAs who don't even remember some of these things you're doing tonight because they haven't seen them since forever. They've been caught up with other stuff like audits or taxes or working in some other environment that is not even accounting related. So they forget stuff potentially. All right. So did I mention to you the heading And accounting has to be the same way each time, each statement? Yes. Please take note of the headings. They don't change. What comes first? Followed by? Name of the company, followed by? Name of the statement, followed by? The period, yes. Monthly, quarterly, daily, annually, whatever the period is. Never changes. That format is the same. If you look at the statement of bonus equity, same thing. Company name, statement name, date. Balance sheet, same thing. Cash flow statement will be the same thing. Okay. So don't, accounting has certain consistencies that never change. That's one of them. The accounting equation never changes. That's another one. And some other things don't change. Okay. And please don't try to change them like, well, I thought I did this. Don't do that. Follow the rules. All right, so let's look at the income statement real quick before we move on. What's the first item on the income statement?
Revenue.
Revenue. How do you think we generate revenue? How do we make money? Yeah, we sell stuff. We sell something physical or we sell a service, don't we? Sales and services. That's how we generate revenues. What are the next items on your income statement? Expenses. Do you notice the kind of expenses there? Anybody look at that? What type of expenses do you see? Equipment rental expense, utilities expense, BEC, yeah, the telco. What else? Salary for sure. You don't pay people that burn down your building. People get a little crazy and get some money. So these are all expenses. Now, these expenses are called expenses because they actually allow the company to generate the sales or revenue that they generate. That's all. So if I ask you what are expenses, you said all those costs that allow the company to generate revenue. Simple as that. No sweat at all. All the expenses you're looking at in this income statement are geared towards generating the revenue. What's the total revenue in this statement? Absolutely. And how much an expenses were incurred to generate that revenue? $2,025. So are your revenues greater or lesser than your expenses? Greater, which means that the net result is called, yeah, net profit or net income, either one. So you have another rule. When your revenues are greater than the expenses, you end up with a what? Yeah, we call it net profit. Why do we call it net? Anybody knows? Net profit of whatever it is. Why do you think we call it net? Because we take the total revenues, which is gross, see? Gross revenues of whatever it is. How much is it? How much are the gross revenues? 2,775 minus total expenses of 2,025. I know you're actually looking at it and you're like, is this it? It is it. And so when we subtract total expenses from our gross revenues, we have our net, or what's left. That's what net means. What's left? Okay. Of how much? Net profit of how much? 750. By the way, you need a calculator for every single accounting class, because you'll be needing it to calculate stuff. Okay. So yeah, don't leave home without it. Any question on that? This is a simple income statement. It gets a little more complicated later, but all we're doing is adding different revenue categories, more different expense categories, and it's the same principle. So once you learn the principle, then if you get a bigger one later, you just work out a couple of things, but the principle never changes. Revenues minus expenses equals net profit. When do you think a net loss occurs? Simple. Simplemente. Simple. See that? Once you start learning the rules, things become a little more easier than you can imagine. A lot of students have problems with many disciplines of study, including accounting, because they don't learn the rules well. And then they get stuck and then they want to say like, why did I do this course in the first place? God hates me, or whatever it is. Not that at all. Stop it, Michael. Man, if only I could have moonwalked, I would have. She said, can't imagine. Yes.
Maybe I missed it. Where did you get 2025?
Okay, students, where the hell did you guys get it from? Because you guys gave me that figure.
You say page 12, right?
Page 12?
That's what you say, right?
Yeah.
Well, in my book, it's 13.
With 13, don't have nothing on it.
13 doesn't have anything on it?
No statement on it. So I own this page 12. Or page 11.
What page? In March.
Good match on the top. You can see that from there? Yeah, man, I used to be like that. Oh, 9, sorry. Thank you, Cameron. It's like, did you see this bloody match? Okay, it's interesting. See that? All of a sudden from her question, that's the beauty of asking stuff. From her question, we found out that the thing was matched. And in the real world, that's the crap that happens too. But by checking stuff, you find out that he posted that wrong. That amount is incorrect. Where the hell did they get that from? Don't know one thing about it. I mean, way to go. So according to page 9, that's something completely different on 13. According to page 9, the total revenues are. So where did we get these numbers from? The other thing. Way to go. So here, gross revenues are 14,000. Okay. And total expenses? 5,600. Okay. Net profit? 8,400. Way to go. She's like doing like this, man. 2,000. Where the hell did that come from? And in the real world, crap happens too. And you may fall upon it and have to question it. See my point? All right. So in this example, our net profit is 8,400. If it was the other way around, what would be the net loss? Really? If this income statement was the other way around, what do I mean by the other way around? If revenues were and expenses were, what would be the net loss? Negative 8,400. See that? Very simple once you understand the principle. Very stinky if you don't get it. All right. What's the next statement? Statement of owner's equity. Okay. That's the statement that shows your investment in your withdrawals, true or false. What's the first line of this statement? Capital, that's it. Capital. That's the only thing you see, capital? Oh, capital on December 1st for this company was 0. So on December 1st, there was no investment. You follow that? 0. Is 0 a number? Some people don't think so, but it is. And somebody asked me many years ago, but if 0 is nothing, I'll get a number. I said, well, what is nothing? Oh, sorry, nothing. 0 is a number. All right, so no investment on December 1st. Next line of the statement. By who? Who's that? The owner of the company How much did he invest? $200,000. Okay, so on the first, nothing. And then, did they say which day he invested 200,000? No, but we know it's not the first, don't we?
Yes.
Sometime, all right, question. Sometime after the first, he invested $200,000. Are we done? What's next? The net income for the month of how much? Oh, you mean this? Yes, the net income for the month is added or subtracted to the equity statement. Added. So now you learn something else. Income is always added to your investment. See that? Don't worry if it doesn't kick in right away. Some people have to go home, sleep on it, come back, ask the question about it again. But that is a fact, and it doesn't ever change either. So we add net income of 84. Are we done? No. What else do we do? He withdrew stuff. I don't know why. We just said we shouldn't do what? No, that's not something you should do. Hopefully, this is an emergency. But many company owners withdraw, even if it's not an emergency. If their friends are going away to Waikiki, they want to go, they just go and take money out of my company. So you, the accountant, said, Roland, it's not a good idea. You're taking money out of the company that we need to pay off expenses. I don't care, it's my company. Shut up before I fire you. Stinky accountant, that's why I hate you all. Trying to tell me what to do. I know, you may not think people do that, but they do. They may not always use those words, but their behavior is the same. All right, so how much does he take out? 2,000. Does that increase or decrease his investment? Decrease it. Somebody said increase? Remember, withdrawals will always decrease your investment. Net income will always increase your investment. So, anything after withdrawal? It's capital at the end of the month. December 31st becomes 206,000. If he had not made the withdrawal, it would have been what? 208,000. Remember, you can interrupt me anytime if you don't see the connection. Okay, that's how the equity statement works. And this is how we communicate to the owner of the company how the company performed as far as the investment is concerned, and whether or not his investment is increasing or decreasing. That's what this statement is about. What you put in plus the net income minus any withdrawals you make equals what you have left at the end of the reporting period. What's the reporting period for this particular guy in this example?
31st.
31st? What period does that cover? A week? A month. So this is a monthly statement. What about the income statement? What is that, a monthly statement? Yes.
Say that.
So you're getting warm. All right. Now we come to the third important statement. That one is called the balance sheet. If you notice, the balance sheet is made up of the three elements of the accounting equation. Do you see them? What are they? Huh? Man, this thing becomes like a piece of cake. That doesn't mean everything is going to be like a piece of cake, because if the works and stuff. But it becomes a piece of cake once you put the pieces together properly. And you start understanding the connections and the rules, and that's what constitutes the balance sheet, the elements of the accounting equation. And now that you know what an accounting equation is, you can do a whole lot of damage with that information. What are the assets in this company? Any asset that you guys don't recognize? No, you recognize all of them, don't you? Yeah, they're typical. There are other many other assets, but these are the typical ones we see every day. What are the total assets in this balance sheet? Yeah, 20,000. See, done. Then we move over to the liability side of the book. You notice the format of this balance sheet? Basically, that format doesn't change. There's an alternative format that some companies use. It's one where the assets are set up like this. All the assets are here, liabilities are here, and equities down here. They don't set it across. So this is an alternative format, but the one you're looking at is much more typical. Okay? But if you see this format, don't panic. It's the same balance sheet. Does this company have any liabilities? Accounts payable. By that name, what do you think that means? Those who've read ahead would know. But those of you who have not, what do you think? Okay, come right in, roll in. Take a seat, turn to page 9. Good work. You can sit. Oh, yeah, you can, because I might. In my excitement, I might do like that. Did I say you guys should take me like if something happens, like I'm talking, I'll do like this? But I say take me? Yeah, that way. Not? You could take. Let me see. Let me get the name. You can take Vincent. Yeah, that's me. Over there. Okay. Because he's young and he can take all the damage they're gonna. Okay. So the only liability this company, page 9 at the bottom, looking at the balance sheet. Vincent. Of course, if you have any questions along the way, just something come in or from your reading, whatever, again, feel free to raise that. But that's okay. You're gonna see balance sheets and income statements and equity statements again in your homework and then other stuff down the road. Don't worry about it. This is not gonna be your final encounter. That's for sure. This is your initial encounter. All right. So the only liability for this company, what's the name of this company again? Who's the owner? What was his initial investment on December 1st? No. Gotcha. Be careful. Don't let me get you with that. Like on the 31st. What's happening on the 31st again?
Exam.
Yes.
31st of October? Okay, that's excellent.
I thought this is not Halloween.
Excellent.
Okay, so make a note of that, Vincent. The 31st is the midterm exam. Okay? If you need a police escort to come, that's okay. Call the police. All right. Before you came, I was telling the class for the next 3 weeks, chapters 4, weeks 4, 5, and 6 will be coming 3 next week, 4 the next week, 5 the next week, holiday the following week, and then midterm on the 31st. So I think we're now all on the same page. Okay. That's important. What do you think accounts payable means? The liability. Accounts payable by the very name.
Bills what you are.
Yeah, you owe somebody. You owe somebody. And accounts payable means you have bills to pay. And in accounting, we call bills to pay accounts payable. Pay up your accounts. That's what it means. So if your accounts payable keeps growing every month, what does that tell you as the owner?
Okay,
You're not paying your bills. Is that good?
No.
So, sooner or later, you keep that crap up. Your creditors, who are your creditors? The people you owe, yeah. Will come after you. Not only will they come after you, they will bad mouth you, wouldn't they? wouldn't they? Say that the King Roland doesn't pay his bills. Anybody ever loaned anyone money lately?
Yeah.
Have you gotten it yet?
Huh?
Have you gotten it back yet?
I've been asked some people who haven't, and we ain't friends no more.
I know. Have you made sure that you said that? You could have just said no. But see, you can't just say no when people owe you money like you're friends anymore, bastard. So yeah, whoever owed you money, they have an accounts payable with your name on it. And for some of us, we're still waiting to be paid. In business, it's like that too. Some vendors are still waiting to be paid. Right? So what is the account payable amount in this statement? 2,000? Okay, it's not too bad. Compared to total assets of? So this guy is keeping his liabilities what? Low. You see that?
I get asked a question.
Definitely.
Okay,
In this class, curiosity does not kill the cat.
the accounts payable amount is taken from the owner's, the statement of owner's equity. Yeah, you did the withdrawal.
Somebody take a shot out before I answer. Is the accounts payable amount taken from owner's equity as part of the withdrawal?
Yeah, because that's what you owe the company.
I was in the
Man, Monique, you have no idea. Monique, right?
Hmm.
I don't think I got that right. You have no idea how important that question is.
See, I was doing a course, ABA course. I had to drop the glass, right? And one of the questions was asking how the income statement, the balance sheet, and the statement of cash flow, how it was interrelated. And it killed me, like,
Yeah,
bad, because I didn't do the basics.
yeah.
I dropped the glass. I was supposed to do general accounting, but they put me in analyzing financial statements.
Hell no. Who the hell put you there?
It was a mistake by my company, so I
A
did it.
major mistake. Who in your company made that decision? Don't call their names. Just say the position. You don't have to call their name.
Training department.
Yeah, the training officer.
Yeah.
Who had no,
They got it mixed up. They got it.
I know, they got it mixed up. Okay, I understand.
So looking at them, they can see the net income from the income statement.
See, she's acting like an accountant already. She's analyzing it. That's what accounting is all about, analyzing crap. Yeah. Now, to go back to her question, did accounts payable come from the withdrawal? The answer is no. Mm-mm. Remember, the only reason that a withdrawal, purpose of a withdrawal serves is so that the owner can use the money for his or her personal use. That's it. Accounts payable, on the other hand, is when you buy something on
Right.
credit and you owe. That's where it came from. Is that harmony? They're not related. Accounts payable is not connected to withdrawals. Okay? Good question. Get that sorted out. Get that clear in your mind. She's making a note now. That's not going to mix me up anymore. Okay? All right.
I have a next question, something like that.
Mhm.
So the balance sheet comes from the income statement and the owner's equity statement. Like you have to do those two first before you do the balance sheet.
Preferably, yes.
Okay. So that 2,400 she's talking about
What is the name of that 2,400?
accounts payable.
Okay, see? In the county, you have to call names because names are very important.
The accounts payable, so if we had a question on this, an exam,
She's on the 31st already. That's good. Way to go.
so they would give us that figure of 2,400, like if they was asking us to sort this out and make a balance sheet.
Oh, absolutely. You will not have to make up numbers.
Okay.
Everything will be right there.
Yeah, don't worry. You will not have to make up numbers. All the information will be given to you, like in the real world. Anybody who comes to you about making up numbers in accounting, call the police. BULIC. We don't make up anything in accounting. A transaction has to occur with a number. Accountants don't mess with no superfluous stuff like dreaming, like, oh, let's make up something. We don't do that. When something happens that has a dollar value, that's where accountants come in. Until then, we are not interested in anything you have to say. How's that? Just I got in trouble with that a couple of men back in the day. Because sometimes bosses want to come to you and give you funny numbers, don't they? Or maybe you guys haven't had that experience yet. That's why I'm telling you now. Don't let anybody come to you with crap, but just put that in, you'll fix it later. Put what in? Where did it come from? What is the transaction? And where are the documents to support it? Oh, wait a minute, I just put the numbers I tell you. Sorry. According to my lecturer back in 2022, I can't do it. Fire me. Because we, as accountants and bookkeepers, we have to have the facts in front of us with a dollar value to prove it. With a dollar value to prove it. Because when auditors come to check, that's all they want to see. Prove it. They don't want to hear your opinion, what your boss said, what the.
And that's how we start stealing with those fake numbers.
Of course, all the time. People use fake numbers in accounting all the time. That's why we have auditors coming in for the fraudsters, the cheaters, the liars, and the thiefers. And of course, for those who make honest mistakes, let's not forget that. We do make honest mistakes sometimes that have to just be what? Corrected. By all means. So yeah, great question again. You guys are asking some good ones.
So, Mr. Wilkinson,
Mhm.
yes, the 2,400 withdrawal that she was asking about, relating to the accounts payable, that would be in the cash thing somewhere.
The 2,400?
Withdrawal.
Yes. See, another great point. Because here's what happens.
In the equity. So
No, what happens is this. When you withdraw 2,400, the bookkeeper or accountant has to make an entry for that. You don't just grab it and, well, you grab it and run, but it has to be recorded. Can anybody think about what debit and credit would be applicable to recording that? Just, I know you're not there yet, but take a shot.
with debit and credit.
Yeah,
For what?
for the withdrawal.
For withdrawal.
You probably don't know that yet because we haven't gotten there.
Credit, cash and debit, I guess whatever they use the money for.
Well, close, but not what we use the money for, but rather a special account called withdrawals. That's what we debit. So we can keep a record of what? All the withdrawals the owner keeps making. So when they decide to say what? I didn't do it.
Yeah, that's a good question because you asked the question, what type of withdrawal would it be in this withdrawal?
No, it wouldn't be a type of withdrawal. That's only withdrawal is withdrawal. Withdrawal has one definition. Owner takes money out. That's it.
Okay.
So in this case, we debit withdrawals, 2,400. Credit cash, because money is going out the company, 2,400. You'll see many more transactions before this night is up. But you guys will ask a lot of very pertinent ones to draw out these things that we haven't gotten to yet. That's fine. Because by the time you get to them, now you know. Oh. All right. Any other liabilities other than payables? No. Is the balance sheet done?
No,
What is left out so far? Equity. What is the equity? Well, let's use the accounting equation. How about that? If the assets total, this is great. If the assets total, how much? 208, 400, and the liabilities total
2,400.
400. According to the accounting equation, assets must be equal to liabilities plus equity. So your equity must be what? Using this equation. 200 and what? Even? Okay. Anybody disagrees? No, it's right there. But you can see, even if it's not right there, using the equation, you can still get it. Welcome to the accounting equation, which constitutes the foundation for the which statement. The accounting equation is the foundation for which of the three statements? The balance sheet. You will not see the accounting equation in the income statement, nor will you see it in the equity statement. Way to go. All right. So having said that, we can move on now.
You know, this on the income statement and the owner's equity, they got for the month ended December 31st. But on the balance, they just have December 31st. So why doesn't it say for the balance sheet, same thing for the month end?
It could say that if you wanted to. Different companies have slightly different styles on the wording, but notice the company name, the statement name, and the date is still always there. Some companies, when we get to date, they will just say December 31st. Really, what they should say is as at December 31st, so that we can know that it's just either a month or a quarter or whatever the case might be.
So it doesn't really matter.
No, yeah, either way, it would be fine, because by the time we get to the balance sheet, we'll know from the income statement, the equity, whether it's a monthly, quarterly, annual statement, for sure. Okay, so that's usually okay for the balance sheet. Man, you guys are sporting all the good stuff. All right, which is good. That means you're not taking a cursory look at this thing. You're looking at it closely. And that's what you need to be doing at this fundamental stage. Absolutely crucial. ABC. Don't underestimate the ABCs. You miss them, dog eat your lunch. Can't read, can't spell. Okay. Cameron. Thinking about ABCs. Can you spell the word operating without looking?
O-P-E-R-A-T-I-N-G.
That's pretty close.
O-P-E-R-A-T-I-N-G.
Yes. Now, have you ever wondered, like, when the hell did you learn that in your life? Which year you learned that? You don't know. You just know you know. Isn't that crazy? We don't know when the hell we learned this stuff. I've been saying all kind of garbage all my life. I don't remember when I learned all that stuff. But that's what learning is all about. That's why I keep saying, read, focus, look at it. You may not realize it's going on, but your brain is doing some stuff you could never imagine. But if you don't do the reading, checking out, the brain does some stuff that you can never imagine. It ignores you when the time comes. I never knew you. You never showed it to me. Everybody else knows that. Well, they showed it to the brain, you didn't. And how do you show it to the brain? Like this. Yeah, read it. All right. What are the three main parts of the cash flow statement that we talked about the last time? The three categories before we looked at it. Cash flow from? Cash flow from? Cash flow from? Cash flow from?
Financing.
How much is that? 3 or 4?
3.
3. Remember I told you part of your exam will be short answers, definitions, and questions, like problems to work out. Or similar to. By the way, just for your information, the problems in your examinations, midterm and final, will be similar to problems they give you for homework. There won't be any surprises. Short answer questions will be like, what are the 3 components of the cash flow statement? What are the elements of the balance sheet? Define an asset. See, like that. Stuff you should know. I'm not going to be asking you stuff like, gotcha. Asked it. No. If you don't know, it's just that you didn't pay attention. Learning is a fascinating thing. Okay, you get out of it only what you. Yes. Okay, students.
Right, so, Untitled Chapter we can cover.
Tentatively for the midterm, 5.
45 chapters.
That's the goal. If we get into 5 and we don't finish all of 5, I won't hold you responsible for the 5 we don't discuss. Okay, but our plan is to finish 5 chapters. All right, so we have quite a bit of interesting things to do. Okay, let me make sure my flip is flat. Page 11. It's really cool little camera spot. I think it was all the way over there. That thing is flipped over. And I was right here, I didn't see it. These glasses don't work anyway. Fake glasses, I'm just trying to make them work. Page 11. Now, Vinique, when she said something about that connection between statements, she may not have realized, or maybe she did, that we were going to see that on page 11. The relationship between the statements. Now, did we look at these statements already? Yes or no? Yeah, we did. So let's see if we can recognize the relationships that are noted on page 11. Follow the arrows and tell me what you say.
Net income with the net income for the month.
Okay, the net income of how much?
8,400.
That goes to where? Where's that arrow going?
The net income for the month.
The net what?
The net income for the month. For the net profit.
Same thing. Net income and net profit are the same. 8,400. So you are connecting that to what?
Income statement.
Okay, so the net income is in the income statement. Okay, so far it's in the income statement. You're not been connected to anything yet. Any connectors yet? Follow the arrows. Tell me what you see. Sorry? Statement of cash flow. Okay, the cash flow at the end of the cash flow statement is equal to how much?
8,400.
62,400. That's the net cash flow position, correct? Where does that arrow go? Yeah, the cash account in the which statement? You see that? Monique? That's how we made the connection. So if you prepare a statement of cash flows and you go to the balance sheet and they're not the same, what does that tell you? Something is wrong somewhere. So somebody's hanky-panky and don't know what they're doing, you can have a difference between the cash flow position and the cash in the balance sheet. That's what auditors look for. Let me see where these arrows connect and they're the same. See that? Any other connections? Any other arrows going anywhere?
The capital.
Capital of how much?
206,000.
206,000. Where does that arrow go? To owner's equity where? In the balance sheet. Does everybody see that? That's the relationship. My. These things are all connected. You just need to know what to look for. And we're here to learn how to look for.
Take it out.
Any other connections? Any other arrows going anywhere? Okay.
I was thinking about it.
In terms of
Connection, I was thinking that when the question I was thinking that it was taking figures off of one statement to put on the statement that
I see your point, and the answer is no. So now you're clear. Once you get that cleared up, then it no longer creates confusion. You don't take anything from one to the other. Okay. All we're saying is there are certain statements that should be balancing out, they should be connected. If you say cash flow at the end of the period is 6,400, when you go to the cash account, that should be 6,400. If you say equity is $206,000 in the statement of owner's equity, when you go to the balance sheet, equity should be the same. And if they're not, somebody did something wrong, either in error or on,
Dry teeth.
yes. Remember, whoever doesn't want to take vacation ever for years and years and years, maybe you can check their work. See, if you tell somebody, okay, time I'm on holiday, start spending, panicking, so
Something wrong.
maybe, not necessarily, but maybe. But sometimes when people have been doing stuff for a long time, they start learning how to do stuff they shouldn't do. Accounting is no different. Okay? I was teasing my wife the other day for forever. I said, do you know, sweetheart, we've been married forever? Good saying. She laughed. What do you mean by forever? She knows what I mean. It's just doing the girly girl thing, throw me off. So I tease her sometimes. I said, when we first got married, you were an angel. You listened to everything I said. She said, I'm not an angel still. I said, yes, you are still an angel. But over time, people develop certain stuff, and then and you guys will see. So persons who are doing things for a long time, even though you're supposed to be getting better and better at it, sometimes if they're doing it for too long, they start doing things they shouldn't do.
Tell me about it.
Okay?
Fall off. They fall off.
He knows. They fall off. He has his own name. Yeah, they fall off. He says, see, your goodness fall on you. Yeah, we all fall off somewhere.
Fall off.
Did we fall off first? Ah, boy. Yeah, so absolutely. So it's important to understand the fundamentals and to get it sorted out, Monique. So you definitely now on the right track. All right, let's go over to page 12 very quickly. Generally accepted accounting principles. I hope you guys have read them. We are learning the principles as we go. Some you already know. The principle of the accounting equation, the principle of debits and credits, principle of double entry, all these things you will learn. The income statement has a structure, the balance sheet has a structure. These are all principles. What the heck is this calling me? No ID? What the hell that mean? Should I take it?
Yeah.
Yes,
I
right
don't
foot.
answer them.
Oh, hello? Yes, it is. Hi, Janisha. I know. As soon as I finish with my accounting session this evening, I get home and have a cup of tea, I'm going to email it for you. I have not forgotten you. Okay? Now, if you don't get it by tomorrow, call me back and say, what the hell? Okay. Okay, take care. I will. Put my own foot in my mouth. All right, so generally accepted accounting principles are known as GAAP in accounting. Those of you who read ahead would know that. Okay, and there are some GAAP principles that we will learn. We have been learning so far. There was a little discussion about the audit. What is an audit? Anyone who read? What's an audit? Yeah, an examination of the financial statement, the books, the ledger, the transactions, to make sure that what's in there are correct and are based on what we call generally accepted accounting principle. For example, in accounting, whenever you record a transaction, as you will see, there must be a debit and there must be a. If you go through and if you do an audit, you don't see a debit and credit for certain transactions, you see a single line, then that is a GAAP problem. So the audience is like, what the flick? This is a violation of GAAP. See how it works? And there are a lot of GAAP principles that you will learn along the way, even at this fundamental level. Okay. And the better you learn them, the more effective you'll be in getting through the semester and the information that you'll be doing. Okay, so keep that in mind. What is in that little blue box at the bottom? That little blue box, what's that? Accounting firms? Some of the big four, what are the names they have there?
I just got, about to say, I just got a job offer from them yesterday.
You got a job from the line?
Mhm. Yesterday. I am not an accountant, they needed auditors.
Oh, yeah, they need auditors or need that.
They offered me a job yesterday. I couldn't take it.
Now, my problem is I've been an accountant, part of my career has been in accounting, blah, blah, blah. The only problem I seem to have these days is that if I show up for a job, depending on what it is, they look at Mike here like, aren't you supposed to be like doing nothing? And I'm like, what the hell does Mike have to do with it? Do I need to? This is already. Yeah, so they need auditors.
They need auditors. I
Yes.
just talked to them yesterday and they told me to come for an interview today. To be honest, the resume I sent them wasn't close to what I know. You see what I'm saying?
Of
But they
course.
didn't offer me the job.
Yes, because they thought that some of the stuff that they saw, that you
Yeah,
actually knew
yeah.
what the hell to do. And so, and yeah, in truth, a lot of people's resumes do not reflect what they can actually do. But
Yeah,
sometimes it
that's
reflects what you have the
honest.
potential to do. But you did the right thing. Because auditing is a very specialized area. And if you haven't had some kind of experience, and if you're still getting through a fundamental accounting one,
And that's what I put on it. I in school taking X, Y, Z,
Indeed.
whatever like that.
indeed.
And I did that 2 weeks ago and I got called yesterday.
That's how badly they need
I tell them I
auditors.
can't do it. I still learning.
Of course.
Yeah.
So I don't know. If I was looking, it is. No, it is. If I was looking for a job, I would just, can't dye my hair look funny. I'll just go in there desperate. Just say, even though you, from the, what do they have old people? Geriatrics. So you get turned white, they think you're what? Geriatrics material. But in fact, what does it mean? You're just like, you need all this. There you go. Firms make the mistake of, and they lose a whole lot of value. Because young people cannot add value. They have to be what? Taught, shown, and it takes years and years and years to get the experience to really be good at whatever the hell it is you're doing. How about that?
That he was wise not to take the job,
Yes,
the offer.
yes,
I mean, well, somebody looking at a resume probably see his potential that, you know.
Well, I mean, they see the work experience, because I work in government most of my life.
Mhm.
And why I put it in my niece. My niece has a master's, she going for master's in fine arts. So what I did, she told me put it in 2. So I said, you know what? What the hell? Let me do it too. They call me Anna and say, well,
So one was a real resume, one. There you go.
no, I put my real resume, but I also added the classes that I'm taking
Right,
because I doing the whole banking and finance course.
right.
And I put that there. Now, I don't know if they took it as I already finished or whatever. But when I spoke to the gentleman who called me, I was like, you know, it's still taking the course or whatever. I wouldn't even lie to you. I can't even accept this because I tell him that I wouldn't even know how to start.
You would not know what to do.
Yeah, I wouldn't know how to start.
No, you won't.
So he's like, oh, okay, well, we gotta go back over the resume and whatever. Like,
Yeah.
so that means whoever look at the resume,
Of course,
then
just like
follow it up.
the person who advised her to do accounting analysis or something. Yeah. Because you were not supposed to start there. Accounting analysis comes into play long after you've gone through all of these fundamental issues. Same as auditing. Okay, you have to do at least a minimum of 4 accounting classes to begin and an audit class to begin. How about that? So yes. All right. So GAAP, for those who read, generally accepted accounting principles, some of the firms, accounting firms out there that conduct audits, where the CPAs are, we said Deloitte and Touche was another one they have there. Ernst and Young, KPMG, Pricewaterhouse, what we call the Big Four. Ever heard that, the Big Four? That's them. There are many other auditing firms, by the way. They're not the only ones. We just call them the Big Four because they're the 4 biggest firms in the auditing world. Okay, just for your information. All right. Organizations that issue accounting standards out there. These organizations have been well established. They set the standards for the accounting practice. Any accountants who are not following these standards are in violation of these practices. They're in violation of GAAP. These organizations are the ones that develop GAAP, improve GAAP, make changes to GAAP, etc. when necessary. What are some of their names?
The Financial Accounting Standard.
Financial Accounting Standards Board.
Financial Report Standards, IFRS.
Okay, IRS. Any others?
International Accounting Standard for IASB.
All of these boards set standards for the accounting profession. And accountants typically follow these standards and doing accountants and auditors in doing their work. Remember, accountants are the ones who do the work, auditors are the ones who check the work. Okay, auditors don't do any work, they just check to make sure that the work is done correctly. Accountants physically do the work. This class is getting you ready to be an accountant, not an auditor. If you want to be an auditor, you will do some stuff later. And this information would be absolutely necessary in order for you to do any proper checking. That's the whole point. You have to know accounting in order to check it. But you become an accountant first, then you become an auditor, so to speak. You don't become an auditor before we become an accountant typically. All right. Other organizations that influence GAAP, they are. Now this board, these are the guys who check the auditors, because some audit firms have done some crooked stuff, believe it or not. They're supposed to be checking and being honest, and some of them have done some dishonest stuff. So the oversight board is there to check the auditor. And when you start checking the auditor, that's a problem, isn't it? Because the auditor is supposed to be the final stop. Now the PCAOB has become the final stop to check auditors, because some of those guys have been up to no good. All because they get greedy. They want more money, and any firm who orders them more, offers them more, they start doing little crappy stuff that they shouldn't do. All right, any other organizations?
American Institute of Certified Public Accountants.
Yeah, the AICPA, they govern the CPAs in the United States. Any others?
The IRS.
IRS, yeah, the tax people, they definitely influence from a tax perspective. They don't care what your standards are. When they set the tax thing, then you have to change the standard to accommodate the IRS. They are the tax gods. You mess with them, when it comes to taxes, they're gonna mess with you. Okay. Any others? Yeah, the SEC, the United States, the SCB in the Bahamas. They regulate the securities markets, and certainly any promulgations coming out of the SEC with regards to securities, accountants are looking at them in terms of their accounting practices and making sure that their firms are accounting for those transactions properly. Okay, any others? Yeah, government accounting standards, which is typically government accounting. Government accounting tends to be a little different from GAAP. Government accounting tends not to use double entry systems and accrual accounting and all that stuff. Government accounting just kind of records transactions as they occur. For example, if the government owes money, it will not set up a liability account. It'll set up the information say we owe them now. But they wouldn't have a set of accounting records saying we owe these people X amount of money. There'll just be a list. And so what happens is you don't have what we call the accrual basis of accounting, where you don't record those outstanding issues that should be recorded in financial statements for the sake of proper disclosure. That's why, for example, if you go to the government of Bahamas and say, show us a balance sheet, they can't show you one because they won't have one. They just have stuff written down, thrown that, not thrown, written down. Yes, yeah, thrown. Doggone it. All right. We have been talking about converting government accounting to accrual accounting for decades. But the reason why they're staying away from that is because now if you convert to accrual, they have to dig up all the mess and disclose it in financial statements. And politicians can't have that, can they? Head of government departments who might be up to no good are not anxious to see that happen. Are all head of government departments, are they all straightforward? They don't do any crooked stuff? Not all of them. Some people are always crooked and some people are always straight. That's why we have to put systems in place to try to control the whole mess.
In our government, they crooked too.
Every government.
No, but we ain't got no system.
Every government. If you were to be able to go and see what the governments of the world are doing, you'd be in total shock. You might just find out that we are one of the more sophisticated.
Okay.
Trust me on that one. Especially when you start checking governments in the Eastern world. What do you think the records look like in Iran? Where the Ayatollah Khomeini is? We don't know what the hell they're doing. What do the records look like in China? Who has them? Who says what to put, what, when, where? You can't even say you don't like Jing. Who's Jing? The Chinese leader. If you say I don't like Jing, suddenly they don't find you anymore. Jing Shanjiang to get you. Lock you up or kill you. We don't really realize how serious it is because we're still only having fun. If we don't like our prime minister, they're Stendhal, and nobody does anything, you go home like that. You can't do that in Easter. So these are the things that the basic things you need to know, the gap principles and all of the influences around the accounting profession. At this stage, it is sufficient just to know who they are, okay, for sure. Professional conduct requires three kinds of things. What are the three? Integrity, objectivity, and
Independent.
independence. So I ask you what are the three keys to professional conduct? Those are the three. Just write them down and get 3 easy points. But not only 3 easy points, but they're the keys to professional conduct anywhere you go. Not only accounting, integrity, objectivity, and independence. But especially in accounting and auditing. We expect it to be these things if we're going to do our jobs properly. We cannot be influenced by money, dancing chicks in bikinis, guys, or nothing. Girls, or money.
Ain't nothing wrong with that.
With what?
If somebody dance wrong.
There is something wrong with it. Because guys are easily influenced by dancing chicks in bikinis.
What's wrong with that?
No, I didn't say anything's wrong with it. Guys are just easily influenced. See, it is a known fact that women are not influenced by women in dancing bikinis. See, that's what's interesting. Like, no matter what.
And these
Check,
days?
no,
And these days?
no, I don't mean that. No, I'm talking about real chicks, nothing on that.
Oh, no, I like that.
I don't get caught up in the thing of them nonsense. I like to be more original. Not stuff people make up. Okay? The stuff you make up fall away and create confusion and pain and suffering. That's the problem with stuff you make up. No matter what it is. All right. So women are not easily influenced by dancing women in bikinis. See, let me see. This for cameras. Dancing women bikini. Here now.
The camera defend
Now,
because you don't look like one of them right now. Who going and look at them?
well, the problem is when guys see that, they lose their objectivity. So you could get them to do things they're not supposed to do. Women are not easily influenced by that. Women are more influenced by this. What's that? Yeah, dollar signs. So you start showing her money, then she's setting all the things she could buy with it, and then she loses her objectivity, integrity, the same thing. So again, we have to be careful what we are being presented with when we are practicing our what? Professional conduct. And remember, persons out there know very well the psychology of males and females. And if they want you to violate your professional conduct, these three things, they will present you with the appropriate things to do it. Interestingly enough. Okay. How do I know? People are still getting caught violating these principles for money or some such thing. Wow. All right. So let's move along then to page 15 and the few points left in chapter 1. I'm sure you've read this section about who the decision makers are. Okay. What are the three main groups? Management,
Financial interest.
financial,
People who direct the financial interest,
okay, and the third group?
financial.
Those with indirect financial interest.
Yeah, direct and indirect. Okay, so for your information and for any question I might ask you, I'm only going to ask you one of the three. To list the three. What are the three? Decision groups of decision makers. And then each group of decision makers have their own little thing going on, correct?
Mhm.
Okay, for example, management is interested in what?
The finance, the investment, the marketing.
Yeah, investors and creditors and all that stuff. What about those with indirect interest?
The investor.
Tax authorities, customers,
Yeah, customers and tax authorities and
the unions.
who? Yeah, labor unions and
Economic.
yeah, regulators and economic planners, persons who have the resources in order to plan the way forward for countries, maybe governments. Okay, so again, all of these people are interested in this information that we're talking about in order to make all kinds of different decisions for all kinds of different reasons. So it is important that accounting information is done carefully, accurately, with the greatest amount of professional conduct, because a lot of people are relying on that information. True or false? All right. For those of you who read on, what are the two major goals for business? Yeah, she's on top of it. You ain't get me with that one. Liquidity and profitability. Who knows the difference, or are they the same? Like if I say differentiate between liquidity and profitability, what might you say?
I think
Liquidity stuff.
Liquidity is cash, money. Yes. Profitability is typically what? Well, profitability is when your revenues are consistently greater than your expenses. That's profitability. Some of it,
Greater than what?
yes, some of it, but not all revenue is cash, remember? Eventually, you hope that it all becomes cash. Because remember, when you sell stuff, if you sell on credit,
You
then
still gotta wait.
you have to pay for the money. But if you sell everything for cash, yeah, then you have liquidity, always. This is why when you go to the gas station, when they have a sign that says what? Ask your mom for credit. Because only your mom is stupid enough. Because mothers are strange creatures. No matter how what's it that churn is, that's my churn. And that's it. But Mary, the last time this boy paid, he gave him more money. That's my boy. Ruben, you can pay me this time? Yes, mommy. Yes, she is.
Give them the rent money. Oh,
Yeah, she'll give it away. Then go to the next child. This one's like, come in, but it better when I get to work again.
I agree.
Strange. Strange. I told my wife the other day, we have two sons. I tell her, if you're holding me and one of my sons, I wouldn't ask you to choose which one. I'll wiggle my way loose and fall. Because she can drop who first? Yeah. Sorry. I love you, but that's my boy.
You think so?
Yes.
Wow.
You don't believe it? Find yourself in that position and come back and tell me.
You probably have to guess later.
Definitely. No matter how good he is to her, and no matter how stinky your son is, that's her.
You married to you.
No, well, you can see for rude awakening. Vincent, you don't get that yet?
I don't have no kids. I don't have no
Oh,
kids.
oh, okay, okay, okay. Then, yeah, we'll wait until that happens. And then maybe that'll change your perspective a little bit. Because when you see how that chick behaves with that child that you have with her, you say, well, mother sick, Mr. Wilkinson was right. She gonna drop me. It's a quick. No, not yet.
Oh, yeah.
Well, let me give you a little hint. Yes, I'll do it.
Because if you're mine like that, I come with investments.
No, it doesn't matter what you come with.
I said no amount of
Doesn't matter.
I'll make it.
Listen, Vincent,
You will go, you go.
listen, you can say whatever you want.
Chris, on my house. I gotta do live. I'm the judge.
Even Cameron doesn't know
That's
what's
how
going
it's
on.
supposed to get.
We shall see.
That's all I want. You will go. But they don't mind sleeping. But I bet.
You stay right there.
I mean, I know what happened. But they stupid. They ain't gonna be me.
What you gonna do? Let's take an accounting of it. What will you do?
My assets is what I put in. The liability is you get out.
How you gonna get her out?
You know how I get out, Mr. Wilkinson?
Yeah, how?
What are your odds of mine?
Boy, listen,
Even if I bill it. or they
Bill?
walk in and I-
you bill? That's a joke. No, Vincent. Let me see if there's any sort of smell. We got the smell.
See, I haven't been in that situation.
Yes, you are a babe and swaddling because you don't know what the hell is going on at all. Okay, so let me enlighten you. Whenever you get married and you move into a home with your wife and children,
But it was my home.
doesn't matter if you inherited, build it, whatever. If you guys,
Balloons now.
Okay, let me draw it.
he's gonna try and draw an illustration. I can't. He's gonna try to come up with debits and
No,
credits.
I'm talking about my situation.
Your situation is
I-
irrelevant.
So you mean I lose everything?
Yes,
No, you don't even exclamation. to that.
No.
They're gone.
gone. Once they're children, you have to get up.
But what if I have the assets tied to how I get them?
Doesn't matter.
So I'm
Once,
not going to.
listen, once they're children, you better take the suffering or you get up.
Even if you're being involved, legally, when the war comes about, everything is on the table to share.
Well, if there are no children, then you get something.
You
That's
got
not-
something.
Yeah, like 50% hopefully.
Yeah.
No, I know that.
Right.
But I feel if that you get that while during the marriage. I didn't know if I achieve before I marry and bring you into what I achieve.
Oh, no.
That get paid from me.
If you're not married, that's not an issue.
That's what I'm saying.
Oh, no, we're not
Why else
talking
do they
about
got
that
to-
nonsense. No, we're talking about married people with children.
No, you just said. Okay. I had my stuff before, but
And you, okay, let's get this done quickly. You had stuff when she met you.
yes, sir.
You married her and put her in the stuff that you had.
Yes, sir.
If the divorce comes, you have to go.
Out of my place.
Yes. If you have no children, you sell it and split. If you have children, you split.
But it's a working group, so you gotta imagine why so much man out there cheating, trying to hide. Because they scared to lose their stuff.
Sure. If you want to have anything, don't have children. Because once you have children, dog eat your lunch. Because the courts will always rule in your favor.
They said even if once you live it in there, you still can't get out just like that.
No, you can't. No, you can't.
They're still let go. There's one dark in the box. But
They're not stories, they're real.
oh boy.
Unfortunately, if only they were stories. All right, so.
It's a few I gotta sleep with my eye open.
Not yet. You don't have any children yet. You don't have to say that. No,
I did not know that.
listen, do you have children?
Oh, so.
Then you don't worry about it. Once children get into the equation, things get a little more interesting. Because their welfare becomes a priority. To hell with you. Oh, not to hell with you, but their
I would
welfare.
take my child in my house and she could go.
No, you can't do that. No court in the world, you will have to have her declared incompetent as a parent.
The government like was paying all the.
No. You, I think you better stick to these debits and credits. So you can become better informed.
Wow.
Maybe by the time this semester is over,
Yes,
you'll be a little more enlightened. Because whether you realize it or not, the last 10 minutes of this discussion was designed to enlighten you.
that's right.
And so consider yourself initially enlightened.
I think the problem is before marriage, persons don't educate you about, when they be raised or.
Well,
Yes, you don't learn but that.
People don't.
No,
know.
we don't, folks, we don't.
I marry you, and you could take my.
Yeah,
Not here, right? Not here. Right.
it's not about right.
You know, for what if I cut myself?
It doesn't matter what you do yourself. As long as you marry and take her in, that's where the madness begins. Not madness,
You said the right thing.
the process.
Crazy though, don't see
That's
crazy.
Yeah, maybe, but that's the way it is. And until things change. See, in a modern society, it is not really relevant to do it that way anymore. But nobody's taking any steps to change it yet. All right? The reason why we had the whole thing, because remember, a long, long time ago, women stayed home with the children, men went out to work. That has changed. And the reason why we made provision for the mother in case the guy wants to leave is so she's not stranded with the children. And so the provisions were made to protect her and the children because she's a housewife with children. Things are not the same anymore, but the law has not caught up with the circumstance yet.
All right, so one question before you go on, right?
Yep, with liquidity and profitability.
No, my talking about my situation. When
You should.
my question is right. I know I go with all this law about marathon. I go
Oh, you're going there now.
right. So if she that goes
Switching
up
to another, yeah,
listen, if she decide, oh, I don't want this nigga no more,
right,
and she go to the court and say this boy raped me, that
Right.
means I got put out my house and not going to.
no, not only do you get put out, you get locked up
Right.
for a minimum of 20 years.
And my place go when I come out.
Long gone. With the next rapist to come in.
Your hard work on. Understand? So that's a hard work.
Come on, listen. Other man, I young.
That's
You work
why
hard to
we
stop.
need to stay away from that thing that they're trying to do.
My house there, I use collateral to get my house here and my duplex.
Listen,
She meet me with that.
listen,
That's how I make my money.
you better get out of that whole thing and update your processing system.
Mhm.
My wife is a bank man. She works abroad.
Then you in worse condition than other people.
That's been how I can make one that.
Doesn't matter.
That's how.
Boy, you don't really get it.
Make one for children.
Vincent,
Mhm.
if you want a crash course, go talk to your attorney before you end up with a rude awakening. Okay.
You see people freaking out on this road, I'll be one of them walking.
You would not have been the first.
I need you loud.
No. Okay, so profitability has to do with whether the company is making a profit. Liquidity means whether or not the company has the cash available to pay its bills when it becomes due. If you sell everything on credit, you won't have any money to pay your bills technically, which means you're not liquid. In other words, you're not liquid, it's illiquid. So very important for a company not only to be profitable, but also to be liquid. Without liquidity, you cannot pay your bills. Okay? So you have to be careful how you sell on credit, how much and to whom. Because your money may not come in fast enough to cover your what? Expenses. And if that happens on a regular basis, dog eat your. Yes. All right. Now, you would have read a little bit about financial analysis. I hope. The only thing I want you to be concerned with, well, there isn't anything of any significance. They refer to one or two companies that financial statements are used to make analysis to see whether companies are doing good, bad, or ugly. Financial analysis looks at profitability, looks at liquidity, looks at cash flow, and all this kind of stuff within a particular company. Okay? And this is the reason why we create all of these financial statements, so that when we analyze them, and we've been doing that all along tonight. When we look at those arrows and look at those statements, was it profitable, net profit, net loss, balance sheets, and all? We've been looking at analysis. That's what it's all about. And some of the questions that you ask are analytical questions that we got sorted out. Okay, that's the point. Now, this thing about ethical reporting is a very simple concept that we violate all the time in accounting. What do you think ethical means? Yeah, being honest about the information you put down in your accounting records. That's what it means. Not every bookkeeper in accounting that puts information in the accounting records are ethical. Some of them are deliberately misstating for one reason or another. They're cooking the books, fixing things because they're hiding money that they're taking out of the company, hiding assets that they're taking out of the company so that nobody can see or find out. So ethical reporting is absolutely critical. It means recording correctly all the transactions that occur in the business, posting correctly, preparing correct financial statements. Do not make up anything. Okay. Of course, that is easier said than done for some people. Because no matter what, some folk sick, like Cain and Abel. Always somebody doing it the right way, and somebody seeking to do it the wrong way. Even though they swear they're not. God knows I wouldn't do it. As soon as they're left alone for a while, they start doing weird and crazy stuff. All right, any other questions about chapter 1? I think we dissected that pretty well, and that was good. That was the whole idea, because chapter 1 is so fundamental to all the other things we are going to be doing down the line. All right, what's the topic of chapter 2? Which I hope you read. Yes, analyzing and reporting business transactions. Now we're getting into the nitty-gritty of the do side of things. Notice in accounting, before you can record anything, you have to analyze it to make sure that you are coming up with exactly what the transaction represents. That is absolutely crucial. Otherwise, if your analysis is wrong, your recording will be wrong. When you're dating, if your analysis of the person you're dating is wrong, your marriage is going to be something that you don't anticipate. And sometimes you don't find out analysis is wrong until after. What is it? If I had known this. This is really a nosy mother-in-law for true, just like the song, man. Every time I turn it around, she in our house.
Oh, yeah.
Should mother-in-laws be in your house all the time?
Remember that law?
Not yours, not yours. Just mother-in-laws in general.
Yeah,
Not
Right.
She doesn't do anything. Let me ask you, she doesn't do anything but anything yet. Should mother-in-laws be in your house all the time when you get married? Probably not. So he still has a mixed thing about it because, he's wondering like, what I'll do if my mom won't be in the house all the time. Folks, for the record, the answer is no. When two people get married, that doesn't mean you forsake your family and you cannot visit and whatever. It just means this constant interference is wrong. It creates problems in the marriage either way, for husband or wife, whoever's doing it. And families love to do this thing. That's why so many marriages are in trouble. Because too many family members are all wrapped up in the marriage. Now, I'm not saying to a guy who's trying to beat her up like he shouldn't stop him and making himself or something. That's not what I mean. But when people get married, if things are normal, like they're trying to get it together, let them get it together. If they come in the house, they don't have no prison. They ain't awkward.
My wife left you. Why is one that you're wrong? Why?
Why don't you do it?
Because
I know. Yeah.
Like, you're not in your, you're gonna board my soda and everything up.
Yes. And she doesn't say anything, does she, Vincent?
No,
No.
park a plate.
Yes.
Say, "Gonna carry this."
And you stop, because if you get into it, she will be on your tail and make your life up.
The only thing they can hold back to really, no offense. That's all it is be.
Well, with the new law, she could
Right.
lock you up and you bastard.
You're right.
She can lie on you.
Thanks.
She's in the back there cracking. I have two sons, and I'm like that crack. One is in Canada, one is like, oh, thank you, God. Because if she decides to lie on her husband, he's potentially going to go to prison, even if he doesn't do it. It's spooky. We need to leave that alone. Let people work it out. If he makes that a habit, leave him. Walk out, do what we always do. But we start messing with that other thing, then people are going to start panicking, not getting married, or start hurting. All kinds of crazy things are going to happen. It's not going to be as simple as the law on the books. It will not be. It's going to get messy. We're already fighting with a bunch of crap. It's not crap, stuff. Okay? My. All right. So now we're into business transactions. And three things you need to know before we get into business transactions. One, when do we recognize when to record a transaction? Okay, very important. In accounting, you cannot record anything that does not happen. If somebody tells you it's going to happen next week, or you can put it in this today, what should you tell them? No. According to GAAP, you cannot do that. When do you record it? When it happens. Simple. Don't let anybody complicate it. I don't care who it is. When it happens, then you record. Simple. When you record, you should have proof. Don't record anybody's word Well, I'm the boss, I say so. Well, fine, you could say so, but I can't record it. You could say so, and I hear you. But for accounting purposes, I cannot record it until you bring me a what? Source document, invoice, proof of the transaction. I'll fire you. And you fire me. Because I cannot record anything by word of mouth. My profession forbids it. Simple as that. And when push comes to shove, who is going to be caught with a violation? You. And your boss will say he never told you. Or whoever it is. I don't recall, like the commission back in the 80s. Sorry, Mr. Commissioner, I don't recall it at all. Some guy from Jamaica. Denying everything. So be careful, don't do that. So recognition is very important. When to record a transaction. I think your textbook tells you the very first sentence, doesn't it? What does it say?
The decision as to when to record a business transaction.
And the point is very simple. You record it after it occurs. Very simple. The second thing to remember in analyzing and recording transaction is the valuation process. What is that process? That's basically what? Yeah, I mean, value means? Yeah, how much means? Money. Accounting transactions are only done in dollars and cents. Period. Don't lose any sleep. So one, recognize it when it happens. Record it using dollars and cents. And then we have the third category called the classification. Where does the transaction go? Is it an asset? Remember that word? Liability? What's the other one? Equity? What's the other one from the income statement? Income or expense? Typically, it'll fall into one of those major categories. Now, there's some subcategories that fall in those major categories, but those are the typical ones. Assets, liabilities, equity, income, and expenses. Those are the major classifications in accounting. There are a ton of sub-accounts that fall into those major categories. But when you hear classification, that is what should come to your mind. So those three concepts: recognition, valuation, classification. Nice to ask questions there. Just to see if you will commit it to memory, because it's very important. All right, turn to page 42. The double entry system of accounting. Can anybody tell me from your reading what that is? Yes. Yes, thank you. For every debit, there must be a credit. And the amounts of the debit and credit have to be the same. Man, you guys are on a roll already. To see, it is so important to understand that. And those things and the things to come. Because once you understand it, it becomes, I wouldn't say always a piece of cake, but it makes your life considerably easier. Once you start understanding that stuff. Okay, so that's the double entry system. What is an account? Anyone? I don't mind if you read it from the text. What is an account? Will you? Well, that's one version. But that's the account at the bank. What is the account for accounting purposes? Where you store your data. Yes. What is your data? Your transaction information. Absolutely. And in accounting, we usually refer to that as a T account. See, like that. The T account always shows the debit on the left. Always. So why not put on the right? Because it was never put on the right. Can I put it on the right? Yes, but it will not conform to GAAP. The reason why we put it on the left is because left was chosen and we left it that way for consistency so that we don't keep changing. Like 1 year it's left, on the next year it's the right, then the next year it's the middle, left, right. See? Like this word. L, G, B, Q, R, S, T, U, V, plus others. Who are they? We know. This in the old days, we say this is Tim. Them. Is this in the Bible? In the beginning, did God create any of these? No. Yeah, that's. And even genetically, if you go back to your genes, you'll see. X and no, sort of X. So maybe Y. So the debit is always on the left. The credit is always on the. That's it. That's your T account. And every time we record a transaction using the double entry system, once we record the correct journal entry using the double entry system, then we take that information, as you will see, and post it to the T account. See how simple that is? Simple as sin. Why do we say simple as sin anyway? Where that expression came from? Simple as sin. Yes, it's easy to sin. Yeah. Yes. Anybody has children, like little children?
Yes.
You guys notice that you don't have to teach children how to lie, no matter how small they are. They're innocent, they don't know. Like if they take something, if they too like this, and they grab something. John, what are you doing? If he could talk, what's the first thing he said? Nothing. Did you move the cookie? No. What's that in your hand? Nothing. John, I see it in your hand. What is it? Nothing. And he will insist on that until you say, I'll cut you. Yeah, then you start teaching how to know not to lie. That's fascinating, isn't it? We don't have to, it's simple as sin. We don't, even our children, we don't have to teach them nothing eggy. We have to fight to teach them all. And so the same thing with the rules. You learn the rules, you commit yourself to them, and you'll be fine. If you don't, it'll make your experience more harrowing than it needs to be. For sure. Okay? In accounting. All right. So we have the double entry system. We have the account. So we're getting there. We're warming up to something. Then we have in accounting something we call the what? Chart of accounts. Did anybody look at it? Yeah. Did you notice how it's set up? Like when I say look at it, I mean like just look into the page. You notice it's set up with assets and liabilities and equity and income and expenses. And the chart of account is simply there to show whoever needs to know all the accounts that exist in the company. That's all it is. It's a chart. It's like a medical chart. You see high blood pressure, low blood pressure, no pressure, kidney failure. That's a chart. That's a medical chart. There's an accounting chart of accounts to show you what accounts exist in the firm. That's all. There's nothing mystical about it. It only becomes mystical when we don't like get familiar with it, and then we have to use it and we don't know how to use it because we never tried. Okay, but that's all it is. Notice the chart of account has what? Account numbers, correct? Mm-hmm. Certain categories of account numbers, and then there's an explanation. What's that on the right-hand side? The description? Of course. The cash account. What's the description for cash? Yeah, so for you guys who are beginners, you may be tempted to ignore reading those descriptions. The temptation is great. When I did my first accounting class, the temptation was great for me too. I didn't want to read that. Especially after I came home from work after all day, and been in class 4 hours, I'm like, man, read it? I'll read it on Saturday. But do take a moment somewhere and read those descriptions for your own personal edification.
Let me see them again in the text.
In one form? Absolutely. The other thing is, if you don't see it in the text directly, The information in here is information you will see in your real world that you will need. Like you need information on who's going to leave the house. Vincent?
I ain't even.
That's okay, that's what we all believe. You can say I'm screaming. Okay, page 44. I know you feel it's heart wrenching, but it is what it is at the moment. Page 44. Yes.
T account, so is it incorporated in the balance sheet or is it stands by itself?
Oh, good question. And you'll see a little bit more later. The T account. You see the chart of accounts? Each chart of account is a T account. So for example, we could call this one what? Cash? Right? What's the second account in the chart of accounts? Notes receivable? Okay, notes receivable. What's the third one? Be like that. So there's a T account for every single account in the chart. When we open up a T account for each one of those accounts, so you have hundreds, thousands, maybe depending on the size of the company, and all of them together is what we call your GL. Anyone ever heard that word? General ledger accounts. So the T accounts individually, when combined together to reflect all the accounts in the chart of accounts, together are referred to as the general ledger.
Okay, so it's not after everything. After the launch. So that-
Oh, okay. Good, that's a good point. Here's what happens. And we'll see it soon. The first step in the accounting process is to analyze the transaction. So there has to be a transaction, yes? Something has to occur, buying and selling something. Once the transaction occurs, we analyze it. What do we do? Is this a debit or credit? Is it an asset or liability? We analyze it. And you'll see how it works soon. The third thing we do is we prepare a journal entry. The journal entry uses the double entry system of accounting, debit and credit. So far, so good? Once we've done the journal entry, then the next thing we do is post the debits and credits to these accounts. What do we mean by post? If you have a debit of 3,000 and a credit of 2,000, what's the balance? 1,000. And we do that for all that are affected by a transaction in the general ledger. Once we do that, then these balances are then extracted from the general ledger T accounts and put into the financial statements. Do you follow?
Now, okay, so this is done before the statements.
Absolutely.
Take it down.
Absolutely.
Put it in the statement. Okay.
Correct. Okay, good point. Get that sorted out in your mind. Very important. The financial statements are typically the last step in the process. Okay, there were little adjustments after that, but that's not the key. The financial statements are usually the last step, the last key step. All of this other stuff comes before the preparation of the financial statements. All of this stuff is designed to get the correct information so that when we get to the financial statements, whatever we put in there, we believe it is what? True and correct. And this is what auditors check as well. From the point of transaction, all the way through. Journal entry, postings, and check it back to see whether or not the financial statements are showing correctly what happened during that particular period. Usually 1 year. All right, so good. Glad you got that sorted out. Because some persons really do believe that the financial statements occur somewhere before these other steps. They don't. They occur at the end. Okay. That's why we call them the communication statements, because they communicate in summary form all these details, as you will see very soon. All right, so if you look at 44, you'll see you would have read the T account. They show you the T account. They give you an example of a T account. Did everybody see it?
Mhm.
Uh-huh. Pretty straightforward, nothing. Anybody had any problems with the T account? No, it's just like your checkbook. You add on, you take off, you add on, you take off. That's what occurs in the T account. And don't worry, you're gonna get a lot of practice in adding and how to deal with the T account soon and very soon. For sure. All right, what are the rules of the double entry at the bottom? Two, what are they? And that's it. Simple. Follow the rules, you have no problem. I think most of us are aware of that by now. All right. So now we can take a stab at something we call normal balances before we get into transaction analysis. Now, by normal balances, we mean that whatever account we're looking at, and this part of it takes a little time, you don't learn it overnight. But normal balances means that whatever the higher, when you look at a T account, whichever size has the higher amount in the account, that would normally be considered the normal balance, typically. For example, in this cash account, if this has 5,000 on the debit side and 1,000 on the credit side, what do you think would be the normal balance based on what I just said? Debit or credit? 4,000 debit becomes the normal balance. If I put an accounts payable here, which is a liability, the normal balance for liability is typically a credit balance. Accounts payable. So if you owe 10,000, this is credit, this is debit, doesn't change.
Mhm.
And you pay 3,000, what's your normal balance? You now owe 7,000, which is your normal balance for a liability account. Now, there are some rules for normal balances. You just have to learn them. Once you learn them, they never change. And I'll introduce you to them initially. Don't worry if you don't get it right away. You will. The normal balance for an asset is a debit. The normal balance for a liability is a credit. Some people are getting it already. Normal balance for equity. And she's been reading this crap. Normal balance for revenue. Who said credit? Yes, the normal balance for revenue is credit. Normal balance for expenses, debit. Okay. That's the basic rule of normal balances. So if you see an asset account where the normal balance is a credit, then that balance is not normal for that account, correct? Here's what I mean. Cash again. Let's say the debit, what's the cash is an asset or not? So what's the normal balance for cash? Debit. So if this debit balance over here is 3,000 and we have a transaction over here for 5,000, then the balance in this account becomes what? Debit or credit? Absolutely. Is this 2,000 a normal balance for this cash account? No.
No.
This means that this account is overdrawn.
There you go.
Yeah, overdrawn means that, yeah, you owe, to put it simply. Okay, that's how normal balances work. The same thing for a liability account. Let's say you have an accounts payable. We know, and let's say this is $6,000. We know the normal balance for an accounts payable or liabilities or what? Credit. Okay, so if, for example, we have 8,000 over here, what would be this balance? What would be the balance? Debit. It should not be the normal balance. Because a liability account never has a balance of a debit.
Right.
What do you think happened here? To create this abnormal balance of 2,000?
Something wrong.
Overpayment?
Something wrong.
Yeah. You only owe what? Paid? So you overpaid. That happens. Some overpayments are errors and some overpayments are on purpose. My. The world is a ghetto. All right. But we're here to talk about what ought to be, not the nonsense that people do. Right? All right, so we look down at the bottom of page 45. We see in that little box. Did anybody figure it out? What box? Bottom of page 44, sorry, 45, down here. Oh, that's what you're asking about?
Yeah.
Okay, well, what's in that little box? What's the first thing? Okay, and then on the right-hand side, what's going on? Okay, so we have a debit plus, which means an increase. And then what's on the right-hand side? Which for an asset, cash? Sorry, for an asset is what? Oh yeah, so that sounds very familiar to what we were talking about, right? Yeah, the same thing I just said. So you just go down the list and see how normal balances work. So if you get stuck and you're like, I don't remember normal balances work, then you go right back to page 45 at the bottom and take a look. Now, if you feel confused about any aspect of the normal balance as it applies to a particular account, that's okay. Raise a question, get it sorted out. Like, I don't understand. Yes.
Yes, why would revenues be considered a credit? I thought that would be something good.
Yeah, revenue is a plus.
Yeah, that's a plus.
That's why it's
The credit means that you got, I mean, you owe, right? You borrow, right?
I see what you're saying.
So-
Yeah, you're raising the classic question. You have to keep them separate. On the balance sheet, right? Liabilities and equities are credits. Correct? And so their normal balances would be what? Credit. On the income statement, revenue, because it increases, it's a result of increasing sales, we say it's a plus on the income statement. And therefore, the normal balance for revenue would be a credit. Why do we have it as a credit? Because on the other side of the income statement, we have this little gang called expenses. Remember them? What do they do to revenue? They decrease revenue. Okay? And so, and again, remember we have some rules of the game. Like, we can question why they choose to do it that way, but we're still stuck with what? The rule. You follow? And here's what I mean. Why do we put debits on the left-hand side? Because that's the rule that was established. No particular reason. Could it be here? Yes. Should we put it there? No. And so the same thing for the revenue. Why is that a credit? Because it was determined that revenues would have a normal balance, that's a credit, and expenses would have a normal balance, that's a debit. That's the rule. Why? So that when we take the debits from the credit, we're able to determine net income or net loss. But your point is taken. But don't be upset about it or anything like that. That's just the rule of accounting that we have to accept and practice. Just like when you're giving a needle. Can you give a needle from any angle?
No.
Yes, but do we? No, we do it from a certain, and somebody goes, can I not do it this way? Sure, I can do that way. But there's a certain rule or set of standards, and for accounting, that's what we're stuck with. These rules have been established, just like the rule of double entry. They have been established, and we have to be guided by them if we're going to be practicing accounting. Can we use one entry set of two? Sure, some people do. But according to generally accepted accounting principles, one-sided entry is not going to cut it. It has to be a double entry. And the double entry is there because it shows us what? Both sides of the transaction. If you put one entry, then you can't figure out the other one. You have to go and look and try and figure it out. People can do all kinds of crazy things with one entry. But if it's two, you see what happened on this side. Each time you see what happens on the other side. But your dilemma rages on. But we're all stuck with the rules. That's why we call them normal balances, because they've already been predetermined to be normal. And so we are bound by those rules in the profession. Okay. All right. Anybody has any other question on normal balances? That's a good question. It comes up every time. Okay. Now, later on, you might run into some situations where normal balances come into question. If you have any concern about it as you're doing stuff, just raise them. And then eventually it becomes second nature. Takes a little time. All right. Now, somebody asked me earlier, where do the financial statements come in? And I said at the end. What I really meant is at the end of the accounting cycle. I didn't say that then because I was waiting to come to now. If you look in the middle of page 46, you will see something called the accounting cycle. Does everybody see that? Mm-hmm. Yes. A cycle is something that goes what? Round and round. Never ends. Just keeps going around and around and around. And you will see how all that works in due course. But now, the accounting cycle has how many steps? Somebody said 6, some said 7. 6, somebody said. Okay. Well, step number 1, what is that? Analyze business transaction. So if something happens, you have to look at it, see what's going on in your mind, what should be debit, what should be credit, how it should be classified, etc. The question might be, well, how do I become good at this? Like everything else, you have to practice and learn the rules of the game, which you will start learning tonight, believe it or not. All right, step 2. Record the transactions in the general journal. All right. Step 3.
Post the journal entries in the ledger and prepare a trial balance.
Yeah, post the journal entries. Where did I say we post them? Yeah, in the GL. And what's in the GL? All of the T accounts. Or accounts. You don't have to call them T. You only call them T for reference. All of the accounts are in the general ledger. That's where the transactions are posted. Just like in your checkbook. When you go to Kelly's and buy something for $300, you post it in your checkbook, don't you? Like you go to the front of the checkbook and purchase whatever it is for $300, we write that as a debit. And we take that amount off the money we have in the bank. That's a posting. But you will see how it's done formally in business practice. Okay? Next step.
Adjust the account and prepare the adjusted trial balance.
Adjust the accounts and prepare the adjusted trial balance. Makes no sense at the moment. Will make sense eventually. Next step.
Prepare financial statements.
Prepare, yeah, the financial statements that we've already talked about. Any other steps?
Close the account and prepare a post-closing trial balance.
Yeah, close the accounts and prepare a post-closing trial balance. A lot of hogwash at the moment, but that's okay. That's what the accounting cycle is, and that's what you will learn, and soon you will wonder why you even bothered to be concerned. Okay,
Mhm.
but once you've gone through the steps, it becomes very, very manageable. Now, look at the bottom of page 47. You see that word source documents? That means what?
Checks and forms.
Yeah, any document that has information about the transaction, whatever it is, there should be a source document. Somebody comes to you to record something without a document, don't do it. After all, where would be your evidence if you don't have a source document? See my point, folks? So don't let people come to you, but they're in a rush, hurry up and record this thing and bring it back later. Tell them, okay. And then what should you do? Nothing. You wait until they bring it. And if they come back tomorrow and say, I don't have it yet, have you recorded it? Tell them no. I said, well, why? Because I'm waiting for you to bring the source doc. Absolutely. But why? Because it's part of the generally accepted accounting principles in accounting that before we can actually record a transaction, there must be a source document. Who doesn't like it? Too bad. Okay. We don't tell the doctors what to do, nor do we tell the lawyers. Do we? All right. What about the journal entry? What is that? Have we talked about that already? Yeah, the journal entry is simply a double entry, isn't it? If you look at page 48, you'll see in that yellow box a typical journal entry. Do you see that? What is the debit in that journal entry? Right on the top of page 48, what's the debit? The debits are always to the left, the credits to the right, indented.
Amount.
What is it? Cash, for how much? $40,000. And what's the credit?
Same.
Who? Capital, who's capital? Yeah, JD. Is that his name, JD?
J Blue.
J Blue. Who's J Blue? The owner?
No.
Yeah, the owner who's making the investment in the company. So J Blue is investing how much? $40,000 in this company. So he debits cash. That goes into the bank account and he credits his capital or equity account for how much? 40,000, the very same amount. The rule of double entry. Does everybody see that? All right. So now we can then jump into the deep blue sea and start looking at transactions to analyze, because this is where the rubber hits the road. For real. All right, transaction number one. The owner's investment to form the business. What's the journal entry? In our example, the journal entry would be in a yellow box and the posting would be in a blue box. You see that already? So what's the journal entry for this investment? How much did he invest? So $40,000, okay. Notice the textbook goes in detail so that students can and should read the detail. Okay? Because when you look through the detail, you start to be able to understand how to analyze transactions. Let's look at the detail for this one first. Okay. Cameron, why don't you read beginning with transaction? Owner's investment to form the business. Transaction. Yep.
On July 1st, Joe and Blue invest $40,000 in cash to form Blue Design Studio. What are we gonna do?
Keep going. Analysis.
The journal entry could record the owner's investments in the business. Increase the asset amount cash with a debit. Increase the owner's equity account J Blue capital with a credit.
Thank you very much. So you see, By reading through that detail, you get to see in accounting how to increase what transaction and how to decrease a particular transaction. And over time, you will learn how to do it with far greater ease. These are the baby steps towards making journal entries for transactions that sometimes become a pain in the butt while you're learning it. It's just like learning to walk, fall down, sprain your finger, whatever. But that's okay. Eventually, it all comes together and you're like, man, this walking is great. And then you're good. All right. So to record this journal entry, what do we debit? Cash. And what do we credit? Capital. For how much? 40,000. What accounts do we post this transaction to? The accounts are in blue.
Assets.
Asset account, what is it called? Okay. And capital owner's equity? Debit or credit? For how much?
$40,000.
$40,000. See that? Simple as sin. And that will always be the journal entry you make for an investment in a business. There's nothing magical. It's all something you learn, and it's a process. Okay? The more you do it, the better you get at doing it. All right. Transaction number 2, economic event that is not a business transaction. Now that is interesting. Ms. Johnson, can you read that?
On July 1st, Joan orders 5,200 of office supplies for Blue Design Studio. When an economic event is not a business transaction, it is not recognized and no entry is made. In this case, there is no confirmation that the supplies have been shipped or that the title has passed.
Does everybody get that? She only ordered. Order is not what? Received. Absolutely. See how subtle that is? And if you don't understand that, some people, if they don't understand this simple concept, they go into a firm, order something, and record it at the time of order. You cannot record anything at the time of order because you haven't received it yet. Once they come into your firm and you take receipt of them, then you can record the transaction. See how subtle it is, how technical it is. Okay, very important point. And that's why it's there. All right, next transaction, prepayment of expenses in cash. What was the transaction?
On July 3rd, Joan rents an office for Blue Design Studio. She pays $3,200 for 2 months rent in advance.
Have anybody ever heard that expression, paying in advance? Yeah, in accounting, we call it what? A prepayment. Do you follow? So she paid how much in advance? $3,200. All right. So now we can go over to our journal entry. What was debited? Prepaid rent? Prepayment debit for how much? 3,200. And what was credited?
Cash.
For how much?
3,200.
All right, what account did we post it? Asset prepayment. Now, when you say asset cash, what do you mean?
The cash account and the prepaid account.
Why do we did we debit the cash account? No, why do we credit the cash account?
So she paid.
Because money went, yes, out of the account. Why did we debit the prepaid account? Aha. Yes, somebody said money came in. I was about to say money didn't come in. But then you said we came up with some kind of value. And here's what she means. Whenever you prepay, it means that you paid what? In advance. And whatever you paid for in advance becomes your what? Asset. It's just that in this case, we call that asset in accounting prepayment. Do you follow that, folks? Just like in accounts receivable. whenever you sell on credit, you don't get any cash yet. But you create an asset account called what? Accounts receivable, with the hope that you will get the money. Same thing, when you pay money for something in advance, that means in this case, you own what? 2 months rent, don't you? As long as you haven't used it up yet. So when you first buy the 2 months rent, it becomes a what? Asset. And we call that asset prepaid rent. And since it's an asset, what's the normal balance? Absolutely. So you might say, well, how do I get all this crazy stuff? There's nothing magical about it. You have to just learn it step by step. That's why we go through this process. Okay, so don't worry about it. It all comes together. Okay, so whenever you pay for something in advance, you own it. We call it a prepayment. It's an asset. The normal balance for an asset is cash. All right, what's the next transaction? Purchase of an asset on what? For how much? 5,200. What's your journal entry? Yeah, for office supplies. Aha, credit accounts payable, which means that you purchase the office supplies on credit. So you get the office supplies, the asset, but you owe the vendor how much? 5,200. And you will continue to owe 5,200 until you do what? Start making payments or pay it in full. See that? Again, once you have your journal entry, you open your account. What are the two accounts for this transaction?
Office supplies.
Office supplies, debit or credit? And what's the other account? Accounts payable, credit. So you notice you're creating your account balances after every transaction. And this is how accounting works, year after year after year. Each transaction creates a journal entry. You take that journal entry, post it to your accounts. And that's where you have your information that you use to later prepare your financial statements. And the cycle goes on just like that every year, every year. So what makes it a pain in the butt? Because in accounting, you have a whole lot more sophisticated transactions than we have here. But this is the foundational stuff. And this is where we begin. Okay? Next transaction, what happened? Purchase an asset, what?
In cash. I'm partial on credit.
So now what you're being introduced to? Different kinds of, and transactions. So that you can see how to record them in accounting. And so whenever you come across them, anytime, anywhere in the world, the same principle applies. It doesn't change. Okay, so how do we record this? Well, what was the partial transaction? Let's go there. What was the partial transaction? Part cash, part credit. What happened? Right at the top of page 50. Look at the journal entry then and see if it helps. What do we debit in journal entry? Office equipment, which means we purchase office equipment. What do we credit?
Cash.
For how much?
13,000.
13,000. And what else do we credit?
Accounts paid.
For how much?
3,000.
When we add them together, what do we get?
16,200.
Which is exactly equal to the cost of the equipment. So in other words, we purchase equipment asset for a total of how much? 16,003. And we paid part of it in, and the other part was. Does everybody see that?
Mhm.
Welcome to accounting. We just come with methodologies to deal with all the different transactions in the world. And that's what makes accounting so unique. And this is why it's necessary to go through all this training so that when you get into the field and start putting information together, you and your unique training, because you don't just walk up the street and learn this stuff. You have to go through the same crappy stuff you're going through, night after night after night, week after week after week, learning these steps. But the benefits come back later. All right. So we have a partial payment in cash and the rest of it is on credit, but you still get your assets. Okay. And of course, you post the transactions to your team accounts. Stop me anytime if it looks a little weird. Next transaction, payment of a liability. How much did we pay? 2,600. What did we debit? Accounts payable. Why? Remember when we did the credit, what's the normal balance for accounts payable? Credit. Does anybody remember the original transaction on credit? Was it 2,600? Accounts payable was how much? 5,200. And now we're paying how much? 2,600. So the balance in payable becomes 2,600. Okay. See how simple that is once you understand what's going on. So we paid 2,600. What's the journal entry for the payment? It's right in the yellow box. Debit accounts payable for 2,600, which is this. And what do we credit? Cash for 2,600. Because it's money going out. It's the normal balance for cash. Yeah. And once you get those normal balances down, then it becomes a piece. Yes. Okay, trust me on that one. All right, revenue in cash. How much revenue did you receive in this transaction? In cash. So no credit. What's the journal entry? Debit cash for $2,800 and design revenue for 2,800. What's the normal balance for a revenue account? Let's see. Once you get those rules down, and see the thing you have to be careful with. Once you learn the rules, like don't second guess it anymore. That's it. It's like the rule of kissing. You should close your eyes first. Because if you open your eyes, it's weird. Same thing with accounting. Once you learn the rules, like don't like come for the other theories, try to change it. Because then you're going to confuse the issue and yourself. But once you get the rules and stick to them, you are fine. All right. Any other transaction? Revenue in cash, any other transaction? What's the next transaction? Revenue on credit. So in other words, you generated revenue, but you didn't get cash this time. You sold stuff on credit. How much did you sell on credit? 1,600. If you sold 1,600 on credit, what did you debit? Accounts receivable. Why? Well, first of all, that debit accounts receivable, is that an asset or not? It is. Why do you debit accounts receivable? Yeah, that's money you expect to come in. Exactly. So you create accounts receivable because now you're expecting that money to come in whenever the customer does what? Pay you. But until they pay you, it's a what? Accounts receivable. Okay? Debit. So we debit accounts receivable for how much? 9,000. Let me show you something interesting. Accounts receivable, remember this is a sale on credit. Accounts receivable, debit for how much? 9,600. What do you credit?
Revenue,
Revenue for how much?
9,000.
9,600. Yes. Now, let us say the next week, the person comes in and pays you $4,000 on your account, the same accounts receivable. What do you think the journal entry would be? They pay you 4,000 cash, debit or credit? Credit accounts receivable, very good. For how much?
4,000.
Which is 4,000. And what would you debit? Cash for? Why would you debit cash? Because you're increasing it. Doggone it. This thing is kicked. I told you, after a while, it's like a song and dance, like waltzing. 1, 2, 3, 4, you're stepping on. And then after a while, you stop stepping on toes. It starts to come together. See that? I didn't even have to help you with that one. You just kind of figured it out. And that's what you learn to do over time. There's nothing magical or mystical about it at all. So when I post this accounts receivable transaction credit here, what becomes my balance in accounts receivable?
5,600.
So now the customer owes me how much? 9,600 or 5,600? And the T account is there for you to make sure the correct amount is shown. Because if that customer comes in 2 weeks later and says, what's my balance? And you talk 2 minutes about what? 9,600. Because your accounts are not what? Up to date. And the customer will say, what? Are you crazy? And that's the importance of making sure that every single transaction is properly accounted for. Especially for money you expect to get and money you owe. My. All right, any other transactions? Page 52, revenue collected in advance. What does that mean? Revenue collected in advance? What the heck is that? The customer prepays for the service. Anybody ever had a situation like that? Like they come in and say, okay, how much will it cost? You said $2,000 and they said, fine, here's the money up front. Now, whenever a customer pays or prepays for the service, in accounting, we record that in a very special way. For example, when a customer prepays for a service that gives you the money up front, what account do we debit?
Cash.
Cash? We debit cash? Why do we debit cash? Yes, right there in the yellow box. We debit cash for how much?
1,000.
1,400. Why? Yeah, because they're paying you in advance. Now it gets tricky. What do we credit?
Unearned design revenue.
Unearned. Love that new word now. See? Why is it unearned? See, accounting over the years and the centuries have come up with names to fit the transaction. You follow? So that anybody who's trained in accounting and sees it, we know exactly what it means. So just how we have languages in law and languages in medicine and languages in plumbing and languages in engineering, we have our accounting language. Why do you think we call it unearned revenue? Thank you. They have paid, but you've not yet performed the service. See that? So until you perform the service, it's what? Unearned. In other words, you haven't done the work yet, you haven't earned it. Even though you already have their money. And the first thing to do to piss people off is to take their money and don't perform. Okay, because people get upset, especially if they trusted you. See, I'll pay you in advance, and then you don't perform. So when you get the money in advance, you debit cash because you received it, and you credit unearned revenue. Now, let me ask you something. Is unearned revenue revenue or liability? Liability. You guys are getting this really quickly. Why is it a liability? You're right. Yeah, because you owe that service. Absolutely. Hold on it. All right, we'll do one more transaction. Collections on account. How much was collected?
5,000.
5,000. What do we debit?
Cash.
For how much?
5,000.
And what do we credit? Oh, this thing, yeah. Accounts receivable for $5,000. See that? And you can see right away, as you practice and practice and practice this stuff, it becomes easier and easier and easier. Okay? No magic. So don't sweat it. Remember, you're only in week number what? 3. So if it doesn't all reveal itself to you, don't worry about it at all. It will come together. All right, so we're gonna stop there, and here's what we're gonna do. I'm gonna assign homework for chapter 1, so you can practice some blah, blah, blah. And then next week, we'll take the first session, hour or so, finish chapter 2, they're just transactions, so we can get past that. And then we're going to get right into chapter 3. So if you haven't read all of 2 yet, please read it for next week. We'll finish up, and then please read into chapter 3. Okay? And we should be where we want to be. All right. Before you go, I need to give you your homework from chapter 1, so you can get started with a little bit of practice, and whatever problems you have, bring them back next week. If you get stuck during the week and you don't like being stuck, send me an email. Okay, for sure. Okay, let me just make sure I have everybody on my list. Vincent, yes. Cut now? Oh, that's the thing I said that, but no, and not you on my thing. Monique, yes. Victoria. Victoria's here. Victoria. That's Victoria who's behind
Yeah.
you.
Yes, I'm here.
Over there. Okay, Victoria, just making sure my register is correct.
Yeah.
Teranique.
I'm here.
Okay, great. Teranique is there. I, Vanya.
I'm here.
Is it I or E?
I.
I, Vanya.
Yes, sir.
Sound like one of Donald Trump's wives. Do you know that?
I heard a lot of times.
Okay, I, Vanya. Yes, I have that. And then Shanique. Is it Shanique? Shanique. Okay, great. Homework. From chapter 1. Page 28. Page 28. Remember, don't wait until 12 o'clock Sunday night to start your homework. That's not good. Start early and do a little bit at a time. Your frustration level will be minimal. Page 28, question E, 9A. Page 28, question E, 9A. And then page 31.
Mr. Wilkinson, you say page 28?
Yeah, page 28.
Okay, let me see.
E as an egg, 9A. And then page 31. Question P4. Parts 1 and 2. P4, 1 and 2. Okay, so have fun with that stuff. That should start to get your hands wet. And when we're done next week with chapter 2, I will assign some more interesting transactions so you can really get into the groove. Because remember, this thing is all about practice. All right. So have a great week, and I shall see you guys next Monday. Please remember, If you haven't read chapter 2 yet, go through ahead and read it, and then go into chapter 3, because that's what we'll be picking up next week as well. Have a safe week. Yes. The journals and doesn't have to be on anything special.
Okay.
Once you have the basic setup, the date, debits, and credit, absolutely, that will be fine. So if you want to work in Excel, that's fine. If you want to look on a regular piece of paper, that's fine, as long as it's legible and fairly presentable. If you finish before Monday, you could. If you finish before Monday, you can email it. Okay. Of course, remember, if you have any questions, please make a note of them so that we can get them answered next week. Okay. That's an important part of the process. Please take care. They say that COVID is gone, but still be careful. Take care. All right. Don't forget the petition in Iran. So Vincent, go and read up on your legal rights.
No, I'm gonna ask some questions. So
To see if you have any.
yeah, I'm gonna ask a few questions.
Yes, right, take care. Yeah, my dear, be safe out there. If they hit your car, don't stop. Good. Worry about it tomorrow.
Yeah. Was it worth it, you think? I mean, need it. Thank you.
No. Now, here's what you have to do. Yeah.
So then you're between the difference between the two or different. Oh.
Yeah, you can copy this and this one.
Yeah.
My
Then
opinion.
you come in next week, right? Yeah, yeah,
Good night, take care.
I get it then.
Just, these are my tips right now. Say that she was okay.
Oh, okay.
Great. This is from who?
Oh, the name on it?
Philip Russell?
Yes.
Michael. wrong with that? That's not his concept.
No, I didn't know. I said, you take that